All right, so Intel just dropped an absolutely explosive earnings report. And yeah, the market went completely wild. But here's the thing. Behind all those headline numbers, there's this really fascinating, high-stakes story of a corporate turnaround. So let's dive in and break it all down.
First things first, just look at this number. I mean, in about 16 months, Intel's stock has shot up a staggering 164%. This is more than just a rally, you know? It's a huge statement. The market is clearly betting big that this old giant is finally back in the game.
And that, right there, is the big question we're going to tackle in this explainer. Is what we're seeing a genuine, historic turnaround taking shape? Or is this a dangerous bubble, just kind of puffed up by hype and some very selective numbers?
So, to really get why everyone was so hyped up, we have to start with the headline numbers. Because on the surface, this looked like an absolute undeniable home run.
I mean, you look at this, and at first glance, it's just a clean sweep, right? Revenue came in at over $13.5 billion, totally smashing estimates. But the real shocker was the earnings per share, the EPS. Wall Street was actually expecting a tiny 1-cent loss. Instead, Intel delivered a 29-cent profit. That's a massive beat. And then, just to top it all off, they guided for an even stronger next quarter.
Okay, but this is where the story gets really interesting. That simple, super positive headline, it isn't the whole picture. There's a whole other story, a very different story, hiding just beneath the surface. In this slide, right here, perfectly captures the puzzle we're trying to solve. On the left, you've got that awesome headline, profit, 29 cents a share. But on the right, you've got the real-world result, according to standard accounting rules, a loss of 73 cents per share. So how on earth can both of these be true at the same time?
Well, it all comes down to this distinction: GAAP versus non-GAAP. That big headline number, the profit, is non-GAAP, which is basically an adjusted number. For this quarter, Intel just removed over $4 billion in very real costs. We're talking things like restructuring charges to get to that positive number. The key takeaway here is, yeah, the profit beat is technically real, but it's based on an adjusted reality. And if you need more proof of that reality, look at this. Intel actually burned through $2 billion in cash this quarter. Now, this isn't necessarily a sign of trouble. It's actually a deliberate, massive investment they're making to build out their future as a chip foundry. But it's a stark reminder that this turnaround is incredibly, incredibly expensive.
Okay, so with all that accounting stuff out of the way, let's talk about the bull case. Let's build the argument for the optimists, because despite the adjustments, there are parts of this report that are genuinely, undeniably strong.
The absolute monster in this report, the real powerhouse, is their data center and AI group. It's up a massive 22% from last year. This right here is the engine driving the whole bull case. As AI just keeps exploding, the demand for Intel's specialized chips is surging, and it proves they have a real and growing part to play in the AI revolution.
And listen, Intel is not doing this alone. They've got some very powerful friends. They're backed by the US government, they're getting investments from rivals like NVIDIA, and they've landed huge customer wins with giants like Google, SpaceX, and Tesla. On top of all that, this is their 6th straight quarter of beating expectations. That kind of consistency, well, it's rebuilding trust in a very big way.
All right, but now we have to flip the coin. Let's pivot to the other side of the argument and peel back the layers on the risks, the stuff those shiny headline numbers don't really talk about.
Intel's entire future, their whole big bet, is on becoming a foundry. That means making chips for other companies. So, this quarter, how much money did they make from outside customers? Just $174 million. Now, just hold that pretty small number in your mind for a second.
Because while they were bringing in that $174 million, that same division lost $2.4 billion. So you see the problem, right? This massive, hugely expensive foundry investment isn't really attracting significant outside business yet, and it's just bleeding cash.
And that's not the only headache. Their biggest business, the PC market, that's weakening. Their profit margins, they've been practically cut in half from where they used to be historically. And on top of that, there are reports of production issues with their next-gen chips, all while the costs for raw materials are going up.
Okay, so let's bring it all home. This is the final showdown, the bull case versus the bear case, head to head. Let's lay it all out. So if you're a bull, here's what you're pounding the table on: 6 straight earnings beats, that booming AI business, strong guidance for what's next, and those incredibly powerful partnerships. You see a company that is executing its plan plain and simple, and has some serious momentum.
But the bears? they're going to come right back at you and say, hold on, the stock is already up 164%. The company is still losing billions, if you count properly. The foundry is completely unproven, its main market is shrinking, and its costs are going up. They see a stock price that has just gotten way ahead of the fundamental reality of the business.
So, you weigh all this evidence, you hear both sides. What's the bottom line here? What does this actually mean for you if you're looking at this company?
The verdict, based on the source analysis, is a hold. Look, the turnaround is real. It has substance, especially in that AI division. But after a 164% run-up, all that success is already baked into the price. The stock is now valued as if it's going to execute perfectly from here on out, and that makes chasing it at these levels a really massive risk. And really, it all boils down to this one powerful idea. A year ago, buying Intel stock was a bet on a comeback. Today, that comeback story is out there, it's well known, so the question you have to ask yourself now is, how much are you willing to pay for pure optimism?